The next financial revolution won't be televised. It'll be tokenized. It's real-world assets. This emerging crypto narrative is the idea of turning popular investments like commodities, real estate, art, or even government debt into fractionalized digital tokens on the blockchain. Imagine owning a piece of a skyscraper, a Van Gogh masterpiece, or your local football club with the tap of a finger on your phone. When the CEO of the world's largest asset manager said this,
"We believe the next step going forward will be the tokenization of financial assets."
the crypto world paid attention. And over the last few years, the real-world asset narrative has been building. Some analysts are predicting a $10 trillion market cap by 2030. There are 3 types of crypto investments to explore in the real-world asset narrative. Imagine you're in a digital shopping mall. The first cryptos to explore are the shops within the mall. They are specialized blockchains that facilitate entire ecosystems of tokenized real-world assets, where you can browse and buy fractions of nearly any product. Secondly, within those blockchain shops are the tokenized products on the shelves. These are the individual projects built on that blockchain, allowing investors to buy tokenized real-world assets directly, like real estate, stocks, or commodities. Finally, to get these tokenized products on the shelves and for them to work reliably and efficiently, they need to connect to real-world data. Smart contracts can't do this on their own. So special blockchain oracles work as the brain, forming bridges between the real-world data and the blockchain. Why should you be bullish? 1. As crypto adoption grows, so too will demand for more blockchain-based products. BlackRock aims to tokenize 10 trillion of its own assets, from real estate to securities. And where BlackRock goes, the world follows. 2. Technological advancements. Improved security, scalability, and interoperability are enhancing the appeal of digitized RWAs to the average investor. 3. Macro trends. When interest rates rise, so does the demand for fixed income products. And if you prefer crypto to TradFi, then tokenization can offer stable yields on the blockchain instead of traditional stock market-related products. Of course, there are challenges and risks too. The first is time. It could take many years for blockchain tech to catch up to well-established TradFi practices. Secondly, assets in the real world are highly regulated, so crypto's lack of regulatory clarity could make it more difficult to create new and successful tokenized products. Finally, bad actors still walk the crypto stage, so security vulnerabilities in smart contracts and the risk of hackers could damage trust in the usually secure RWA market. So be careful, it's a jungle out there. The addressable market is big, really big. With $800 trillion in traditional markets poised for disruption, the RWA narrative could transform the entire financial system, making it more accessible, liquid, and transparent for everyday investors. At CoinMarketCap, we believe the RWA trend will be a major driver in increasing crypto adoption and integrating it into mainstream finance.